Hey everybody, it's Matty here with Altcoin Buzz with you on this Saturday. Hope you're having a great weekend so far. We're going to be taking a look at this Economist piece today. As ever, they are doing their darndest to spread FUD. It's in their nature. What would you expect? We're taking a look at this Duo Network interview here on altcoinbuzz.io from the project review team. We have this update from CoinDesk relating to Paxos Global. We'll unpack that for you with an article on their site as well. Ontology is in the news. We're going to bring you an update on everything that they're up to here on Medium. AMB Crypto is talking about Tether and Bitfinex drama. And then finally here on coinspeaker.com, 5 assets moving towards tokenization in the financial industry. Let's begin with a very quick snapshot of the market. Things are still kind of moving sideways, I suppose. We had that big retracement a couple of days ago now. Bitcoin sitting at 5,200, just under 5,250 here on CoinGecko.com. You can see things are for the most part pretty much flat, sitting at 170 billion total market cap. Moving on here to The Economist, a fresh probe raises fears of systemic problems in the cryptocurrency market. Trust in one of the most traded virtual currencies slips after an alleged $850 million loss in deposits. Of course, we're talking about Tether, we're talking about Bitfinex here, we're talking about the New York Attorney General, which we covered the other day. Rumors have long swirled about the bona fides of Tether, a 4-year-old cryptocurrency with more than $2.8 billion in circulation, and of Bitfinex, the exchange on which it was traded. On the 25th of April, New York's Attorney General Letitia James accused both of a cover-up intended to hide $850 million in losses in client and corporate funds. Tether slid just 1.4% against the dollar on the news, but according to CoinMarketCap.com, a website, virtual currencies at large suffered more, with some $10 billion wiped off the collective value within an hour of the Attorney General's statement. Bitcoin, the most famous, fell from 5,499 for a single unit to a low of 4,953 before paring back some of the losses. So being an Economist article, this is a little bit more introductory. They're, writing for the layman in the cryptocurrency space, people that may not be up to speed with even some of the basic terminology. But I got to say, they're kind of even-handed in this. It's not quite as negative as I would have expected initially. Many of us know the story already, but The Economist concludes here, the accusations would have been much more severe just a few years ago. Now, however, they are likely to cause no more than a, quote, short-term blip, says Eric Turner of Messari, a data provider that tracks cryptocurrencies. Some 30 stablecoins are under development, he notes, with a handful operational. Skipping ahead, investors will welcome more transparency, and tailwinds behind alternatives will have a positive side effect. Bitcoin prices closely track fresh issuance of Tether, which creates volatility and makes it easy to manipulate markets. The stablecoin pioneers' fall from grace will probably make the cryptocurrency market more stable, not less. So pretty interesting take here. Usually the economists just can't get enough of crypto bashing and FUD creation, but there's not a whole lot that I can disagree with here, personally speaking. Of course, if you're not familiar with this issue, what happened with the New York Attorney General just the other day, then go ahead, read this full article, but let us know what you think about the tone and tenor of this piece in the comments below. Skipping now to altcoinbuzz.io, article by the project review team from today, the 27th of April. Duo Network interview, tokenized derivatives platform. Altcoin Buzz spoke with CEO Jerry Lee to learn how Duo Network is tracking. So Duo Network tries to solve the market fragmentation and counterparty risk problems faced by centralized derivatives exchanges. It will achieve this by providing tokenized derivatives powered by smart contracts, making transferring derivative positions as easy as transferring cash. So about the Duo Network, what is CAT, C-A-T, and how does it work into the network? CAT is collateralized autonomous token. It's our proposed framework of tokenized derivatives. It takes underlying assets into a custodian smart contract and issues 2 or more suited tokens, each representing a side of a derivatives contract. CAT is the core component of the network. It's supported by price oracles, trading platforms, and other supplementary functions. What are the use cases of the Duo Network tokens, and how can they be applied in real market strategies? Well, our direct targets users are DeFi users who can use Web3 portal-enabled wallets to interact with our decentralized applications. There are various types of derivatives in the pipeline, such as stable leverage dual-class tokens, long-short dual-class tokens, options, digital options, etc. We will also reach to a broader audience through collaboration with exchanges, whether centralized or decentralized, wallets, and other DeFi apps, whose derivative products or prediction markets might be powered through Duo Network. Next, the question comes up as to when the ICO is happening and how the funds are being used. The public pre-sale will be held on the 27th of April, UTC 12 p.m. noon on bitmax.io. The funds raised in pre-sale will be funding Duo's ongoing operation and community outreach. So as I mentioned, the token is Duo, DUO. It's an ERC20 token. Total supply of 100 million Duo. Initial circulation will be 10,360,000. Pre-sale allocation of 10 million with 2,500 Duo allocation per account. If you want to learn more about Duo, you can follow them on Medium, on Twitter, and on Telegram. And for more information, we encourage you to check out duo.network. Trustless Derivatives, a decentralized platform enabling issuance, trading, and settlement of tokenized digital derivatives. CoinDesk had this tweet, which we want to cover. This from yesterday. Just in, Paxos Global will launch a new version of its PAX stablecoin on the Ontology network blockchain next month, supplementing the current Ethereum token. So clicking on that link, we're brought to Medium. Ontology to launch regulated USD stablecoin Pax on Ontology. Ontology has announced its plans to launch Paxos Standard, a regulated USD stablecoin on the Ontology blockchain. With this news, Ontology will work to explore application scenarios on DeFi, decentralized finance, another Ontology partner network, beyond exchanges, and are expected to launch the PAX token on Ontology in May. It's going to be based on Ontology's OEP4 token standard. The token, which is the Paxos standard, will continue to use PAX as its ticker. PAX will enable atomic swaps between the Ontology-based main blockchain and blockchain network and make it easier for individuals and institutional partners to do business pegged to fiat in the Ontology ecosystem. Check out the rest of this article for all the information. CoinDesk is also covering it here as well. Paxos to issue up to $100 million of stablecoins on Ontology blockchain. This article from today, the 27th of April. If you still cannot get enough of that Bitcoin and Tether and Bitfinex drama that we've been discussing, you can take a look at this sort of retrospective article, I suppose, now at this point on ambcrypto.com. We're not going to get into it, but I wanted to list it just so you guys are aware. This is a fresh one from the 27th of April. Again, kind of looking back. AMB Crypto says Bitcoin blockchain gets hot and heavy after Tether and Bitfinex drama. So again, if you're a glutton for this kind of news, I don't know, I think it's a little bit more sensational than it has to be, at least in my opinion, but nevertheless, we'll link to this in the description below if you're interested. Finally, today, members of the Altcoin Buzz Army were on coinspeaker.com. 5 assets moving toward tokenization in the financial industry. While the crypto world is talking about the tokenization of everything, it's worth knowing which assets can be tokenized best. Siddharth S., product and marketing strategist from Blockchain App Factory, shares the list of 5 of them. So the biggest stories in the last 6 to 8 months in the blockchain and financial services industry include securitization of illiquid assets such as venture capitalist funds, real estate, art, and even tokenization of sports teams. In fact, asset valuations are going to be relooked, rethought, and revamped by the introduction of blockchain technology in the industry as a whole. So which 5 securities are the most marketable? Well, first of all, we have venture capital funds. Traditionally, they're very illiquid. The increased liquidity of equity tokens, or ETOs, would allow more participants to invest in the asset class. A larger pool of investors is a boon for venture capitalists. And I think, at least hypothetically and theoretically speaking, if you were to tokenize a major investment that would traditionally be done by a single party venture capitalist, if you were to tokenize that, you'd be essentially able to crowdsource important ideas, and this is a tokenization methodology that would be akin to a Kickstarter execution. I think blockchain and tokenization could really broaden that paradigm and make it more and more appealing, more and more rewarding as well for both those seeking investment and those looking to profit from their investing. So that's a very good point. I agree with that. It's not something I'd considered previously. Number 2, precious metals like gold, silver, and others. The tokenization of precious metals or diamonds increases the possibility of fractional ownership of the assets with the bonus of increased transparency in the conservative, opaque, and illiquid market reserved for the wealthy. Real estate is another obvious choice. That tokenization enables investors to buy fractions of properties and then earn capital gains and dividends similar to traditional investments. The tokenization ecosystem reduces entry barriers, compliance, and transaction costs with easier access to a larger pool of investment opportunities across the globe. Art and luxury goods is another one. And finally, rounding out the list at number 5, stablecoins. So this is a list of 5 pretty good suggestions in my opinion. Again, that's courtesy of Siddharth S., product and marketing strategist at the Blockchain App Factory. Let us know what you think about their selections and perhaps any that you would add to the list if you were publishing it for yourself. But I think that about rounds it out today, everybody. Do be sure you're following us on all the regular social media and keep checking back into our website, altcoinbuzz.io, for all the latest updates and developments. Go ahead, like, subscribe, share, and hit the bell to receive notifications. If you did indeed enjoy this video, I wish you a great Saturday, members of the Altcoin Buzz Army. All the best if you choose to invest. And as always, I do hope to see you again soon in our next video. Take care. Have a great weekend.